Hello and welcome back to another episode of the Wendell Effect. My name is Brandon Wendell, Charter Market Technician, and I'll be your guide for this video where, well, you'll see what we'll do in just a moment. We're going to shrink this down, just remind everybody that we are not broker-dealers or investment advisors, and let me move this out of the way. And we can see the disclaimer, and we are basically looking at this information from an educational standpoint, not telling you to buy, sell, or hold anything in particular. I am also, just mentioning that there is always risk involved in the markets. No matter what we do, we can't eliminate the risk. We just try to minimize it. And we're not subject to trading restrictions. We can have a position in security and initiate one at any time. So that being said, you can stay in touch with us, and I'd love to hear from you as well. Please email me at thewendelleffect@tradingmindsetassociation.com. Comments, questions, love them all. So let me go ahead and hear back from you. You can also follow me on Twitter at TraderBdub. You can search for us on YouTube. Probably found us there already at The Wendell Effect. And there's a website, Trading Mindset Association, with these videos as well as many others that'll be available for you as well in the future. So moving along today, we're going to start off with our normal schedule for the most part, weekly market analysis on the equity index futures, moving on into the energy markets, then to the sector analysis, and we'll look at some certain stocks and opportunities that might be out there as well, and then moving on to the Indian markets for my friends overseas. So starting off on the equity index futures for the week of June 27th, here we go. Well, we saw the big push to the upside, but I'm not ready to call a bottom of the bear market yet. Okay, all we had was a positive divergence, and this week we're starting off with an indecision candle, believe it or not. So right here you can see if I bring out to the live, where is it? There's my live chart, and actually if I go to weekly, you can see that's an indecision candle. Well, that means we've had the positive divergence, which signaled the pullback, but we have to actually make a confirmation to actually put in a low. The confirmation can come in one of two ways. Either we make another low that fails to get the RSI below 40, or we break higher, make a higher high, as well as break out above 60 on the RSI. You know, if I were to take you back, let's see, we'll go to the SPX, the index, and go all the way back in time to 2008, 2009, and show you that's kind of what happens for market bottom. So for instance, here, early we had a divergence, and a little bit of education for you to how to identify a market bottom, right? And right there, you can see we got a divergence. Okay, so prices pull back. Pretty much the same picture right here as what we had last week. However, we never put in another low that was above 40 on the RSI. We also never broke above 60. Okay, so we're doing it again. We got another divergence. Again, that's just the warning sign, big whoop, right? We need confirmation. Well, this one came a little bit later, but right here is a bottom that was just put in. And notice that bottom does not have the RSI moving below 40. Now, that's not going to be the beginning of the move. Obviously, the bottom of the market was back here at the divergence, but that confirms the end of the trend. And you can see it's okay if you're not first as long as you're not last. Right? You don't necessarily have to catch the initial move, is what I'm saying. But currently, we have put in a divergence, which is the first part of a bottom. It's a warning sign. So, you know, if you're short, maybe you need to lighten up on the shorts a little bit, but we're not confirming and we can't necessarily go long term. So what we're seeing this week is just a little bit, or last week even, was just a little bit of a pullback. We had a bullish trend. You can see that the week before we had a head and shoulders actually on the RSI, which led to the drop, but we never got above 60, so we're still bearish. Even now, still bearish. Okay, but we're getting a bullish correction in a bearish trend. So once again, if I go back to the live chart, down to the daily time frame, and let's see what we're looking at right now. You can see indecision on the daily for today. So we have last week, then today, including the weekend, indecision. That may cause a bit of a push to the downside yet again. We're pausing after this rally up. And we're doing that at pretty much a 50% retracement of the previous impulse down. So, hang on. There we go. And it's a little over 50%. Unless you go from the extreme highs right here, then it's pretty much at 50%. So overall, you know, this is a good spot for us to start moving back down. If we move back down and don't get below 40, then we actually get confirmations of the trend reversing, or at least halting. But it's not there yet, so you got to be patient. On the 4-hour chart, before the market opened today, this was what I was looking at, is possible stalling of the supply, but it wasn't really going to stall well there because there's too much bullish pressure. I think we could push up to a little over 4,000 before we stall out and actually drop. So far this morning, we've been just going back and forth, no real motion altogether. Anyway, on the ES, the 4-hour chart, continuous contract, you saw a couple of weeks ago on the 12th, I had this picture when I was looking for these demand zones at 3701, and sure enough, we bounced, overshot it a little because of the momentum, but look at that. That's where we bounced. So the zones do hold, and now we're looking at us possibly going a little over 4,000 before we resume the bearish trend. And again, I'll be watching very closely as we move back down to see, do we hold above 40 or go below 40 on the RSI? If we hold above 40, the bottom is in. We'll probably go a little sideways before we start rallying again and continue our bull markets. If we don't hold above 40, the bear market is still intact. We're going to go lower. So the next weekly and monthly levels are a bit lower, so we'll see how that happens. Again, I'm not going to call anything yet until I see it. Same thing with the NASDAQ. Positive divergence. Again, just a warning sign, not actually telling you whether or not we're bottoming out yet, but it is a warning. Going back to the 12th of June, I put out this level, both of these levels actually, and was saying that this might be where we end up turning around and getting a little bit of a bounce. That's our next strong demand zone. Sure enough, it's exactly where we bounced. Okay, you can see we bounced right at that same area of demand that I pointed out, the 11,265, 10,942. So hopefully you pay attention to these zones I'm putting out there. I'm not making these up. I'm just observing what the market's telling me. And based on the experience that I have in the markets, they work. I mean, they're just order flow, leftover order flow from the institutions. So in the chart school, I'm actually going to go and explain that in more detail. So watch for those videos coming out very soon. I'll even show you how to find some of these zones in the videos. So looking at the daily chart, we can see we are simply retracing. We have a little bit more retracement here. As the NASDAQ tries to take over on leadership to the upside, we're actually back 61.8%. And if we go down to the 4-hour chart again, we've got overhead supply zones at 12,310. And this is a little more bullish on the 4-hour. You see, we did get the divergence and confirmation of reversal. So I'm a little more bullish now, not necessarily on the S&P, but on the NASDAQ because of what's happened here on the chart. If we go out to the live NASDAQ chart today, let's take a look. Let's see what's going on there. Drop down to the 240. There we are. You can see, well, we've pulled back a little bit. We're getting a little bit of stalling going on just as we are approaching that zone. We haven't quite got there yet, but that's where I was expecting the pullback to really occur. And we're starting to find some weakness before we even achieve that. Overall, though, if we pull back and bounce, we're probably going to bounce from this 11,864 and then maybe test that 12,310. So currently on the 4 hours and less, I'm bullish on these equity markets after a little bit of a pullback this morning. On the Dow Weekly, same picture, divergence. Again, got to wait to see what happens after this to see if we've actually put in a bottom in the markets or if it's just a pseudo bottom before we go lower. And again, going back to June 12th, we happen to bounce off those areas of demand, 302.35. You see, I had that marked on the video and went over that. If you go back a couple weeks, you'll see called that bottom out pretty well, and it hit last week where we got that bounce. And now we pulled back quite a bit. Same thing, we got the supply zones overhead. This is a weak one, which is not likely to hold because we got too much momentum. But this correlates with the ones on the S&P and the NASDAQ at 32,222. That's where I'm expecting a bit of a pullback, the end of this upward movement and bullish pressure that we're getting right now. There is a demand zone right here at about 30,900 or maybe 850. So watch for that as a bouncing point to get you up to 32,222 this week. On the Russell, same thing, positive divergence again. This one didn't go up as much. Notice we didn't get that green candle that enclosed or engulfed the red. So a little bit weaker here than we saw in the other markets, and you're seeing it as well. On the 12th, in this case, I didn't have a demand zone going back, but what I did have was a Fibonacci extension and the measured moves. You can see we made the measured move, 0.618. Exactly, and that's where we ended up bouncing. So we had demand on some markets. We had the extension on this market. Either way, we're pulling back right now. This is much weaker than the other markets. So if we drop, this will be one of the first markets to start moving down very quickly. And you can see again on the 4-hour chart from 612 at the bottom in there. Actually, I did have demand. I didn't think I did. So that was the demand from November 6th. It bounced, and then we ended up going lower to the next level of demand. That's all. And once more, we've got some overhead supply here. This is a weaker index, so we might want to watch, see if that's hitting today. Wrong one. There we go. And yes, we're hitting one today. I also put in the retracements, as you can see, because we're at a 50% retracement here as well. But this was the upper zone that correlates with all the other markets. We also have these zones that, again, this is a much weaker index. We're stalling out at these zones right now. And look at the momentum dying off. So we may roll over, sell off a little bit first. The Russell doesn't have a good demand zone. The other markets did. I would buy the other demand zones, especially the Dow, as it's a stronger index, and maybe even the NASDAQ on the pullbacks. And then again, target that upper level supply. In this case, it's about 1850, but I'm not going to touch the Russell, maybe on the short side, not on the long side. It's just very, very weak right now. So that's the equity markets. You got questions? Email me. Let me know what you think about the video and make comments down below. Make sure you hit subscribe and like as well, please. So for the energy markets, this was the week before, 6/12, 2 weeks before. And you can see, again, we were hitting this Fibonacci extension and getting indecision, but we haven't much changed. You can see that, well, sorry, on this one we did pull back from that area. So we collapsed from that area. We pulled back 23.6%, and we're having trouble closing below that level. I'm not sure if the retracement's done. It all depends on how we finish this week. If we close or end up above this, and then we're going to continue going higher. If we end up below it, then we're going to continue to retrace more. So if I go back to crude oil on the weekly time frame, there it is pulling back, and you can see we're not quite sure which way we want to go yet. Kind of stuck in between. So we got to resolve that by either breaking above or below that candle, the indecisive candle with a little bit of bullish pressure, to let us know where we're going to continue to go for next week. So far, we're just sideways. And that's possible for the rest of the week. 6/12, again, we had that move up. Here, you can see we exceeded this first area of demand. We had a small bounce there, but too much momentum to hold that. We ended up pushing through to our next level. And we're bouncing a little bit this week, but it's not likely to make new highs because we started the bounce from under 40. So I doubt we're going to get above 116 this week unless we see more lows put in without going below 40. That's going to be a key thing for me to watch. So as of right now, still a little bit more bearish on this. We could push a little lower on crude oil or go sideways for the next week. 4-hour chart showing a little bit of bearishness. You see we have the 108.87, 110.06. On the hourly time frame, there's a supply zone around 109.01. So I was kind of watching that for today, possibly getting ready to short down to the 100.81. But that's been a tested zone, so it may not hold too well. We could ultimately get down under $100. Wouldn't that be nice, right? So if we take a look again at the live chart, if I go down to the 4-hour, whoops, wrong button, sorry. You can see that we're holding that 108.87, 110.06, and more importantly, that hourly zone. Let me show you that. Going back, here it is. Zoom in a little more. And I think we might have actually exceeded that 109 area, unfortunately. So it looks like the 4-hour zone is still holding. There it is, 109.02 to 24. Problem is we went above 60, so that's why we were able to violate that. But on the 4-hour time frame, we did not, so the supply is holding right now. It may push us down a little bit more, but it looks like it's going to be kind of choppy and sideways this week in crude, so you may find better opportunities elsewhere. Same thing, nat gas, we had that big move to the upside. Momentum has been dying off. That's what I was talking about on the 12th, and you can see what happened afterwards. That divergence warned us before the prices dropped. So we are not done moving down, it looks like, on the weekly chart. Our next bottom is at 5.125 on nat gas. So on the daily chart, we're continuing to move down. We have a closer bottom here of 5.865. Not sure if we hit that today. I know there was some movement to the downside this morning. We also have another target at 5.082. Let's take a look. Oops, NGQ. There we go. And Yeah, we almost hit some of those areas. Not quite, actually. This is on the 4 hour chart. We got down to 6, but not that far down. We do have an area of supply here on the 4 hour. I'm not sure if I marked that off or not on my slides, but I'll go back to that in a moment. But you can see 6720, 6854. We're going to continue to push down a little bit, it looks like. We tried to bottom out with a divergence here, but we're not done moving down. So I see those downside targets as very viable. Yeah, this is what we just looked at, the divergence pushing us up a little bit. But again, we got that nice supply zone that should take us lower to those targets ultimately. On the weekly chart of gasoline, we pulled back and hit a little bit of demand, but it's weak. It's a very wide zone compared to the move out. So I don't see that as holding too well. We'll see. It could, but it doesn't really look like it wants to. So going back to the 12th, again, I was watching this weakness and warning of that. And sure enough, it followed through big time down to that demand zone that I pointed out. So hopefully you're able to take advantage of that. I know I took a really nice trade on the downside today. You know, looking at the 4 hour chart, we opened up pretty much right in supply this week, and we're not above 60, meaning we're not going to have enough momentum to carry through that zone. So look for selling pressure. This is a tested demand at 3595, and it would be nice if we get down to 3409. It looks like we might get a little reprieve and a push back down. We'll just have to wait and see. Heating oil, that's the one that was going a bit sideways that I looked at. You can see these topping tails overall trying to push down, but not really getting the momentum to push down. So it's looking like it wants to retrace with the momentum dying off. And going to the daily chart, you see that weakness that's coming in, lots of selling pressure, but it's not going very far. So we may just be choppy and sideways on heating oil. We're holding this supply zone, but the more we probe at it, the more likely it is to break. But, you know, it should have been dropping already if it was really going to go to the downside quickly. So I just don't see it. And just be patient. You know, again, look for better opportunities. Momentum's dying off. That means we're going sideways. So moving into the stock market, you know, kind of a wild week last week. We saw pretty much everything running to the upside. You look at the last 6 months, and the only shining star was energy as we were getting very inflationary and looking at a market peak. But then last week, wow, what a change. Energy fell out of favor, but we saw a lot of gains in the safe havens here. Staples, healthcare, and utilities rather than across the board. You should have seen more gains over in discretionary consumer services, communication services, technology, and industrials if they were going to continue to go up. So this looks like a dead cat bounce in a bear market, meaning we get a small bounce before we go lower. So be careful there. But the last week, that's what we had. And some of the leaders, they weren't necessarily the leaders, but overall, you're seeing pretty good gains in what should be the safe haven securities. You know, this is what it looked like last week, where really the only bear market was in the energy markets that had already gone up so much. Not a big surprise. Profit taking, right? Anyway, taking a look at consumer staples, normally this week is pretty bullish. You can see from June 26th to July 14th, it is normally a very bullish time of year for this particular security. This happens to be a new website that I'm using called SeasonX. I mentioned it, I think, in my my live version of the Wendell effect. And if you're interested, you know, I'll give you guys a link for that. I can find it real quick. There we go, links. Bring that up for you. Just in case you're interested, you can go ahead and enroll in that. Let's see. Thought I had it on here, but I guess I didn't. What did I just do? Bear with me a moment. I'm hitting the wrong buttons, and everything's going wrong. Nah, it's okay. It's the way it goes. Oh, actually, I have it on the next page anyway, so I'll bring you there. But, you see. 2 pages. There it is. SeasonX. There's the link if you're interested. SeasonX.com/about ? IMREF equals JRF55W. It's a big, big code. But anyway, if you write that down, if you want to go ahead and click on that, you can go ahead and sign up if you're interested. You know, it's one of those things if you're interested. So, getting back to this shows me seasonally what's normally expected this time of year on any particular security. The staples are normally pretty bullish, so we want to stay on the long side there. You can see if you bought on the 26th of June, sold on the 14th of July, you won 93.33% of the time, and the average return was 2.5%. So not bad. 14 gains. The only loss was in 2017. Everything else is very bullish, including 2020 was extremely bullish. So let's see. Moving along with that, XLP, that's consumer staples. You can see, unfortunately, we're coming up towards a daily supply zone that might give us a little bit of weakness coming up. So we got to be a bit careful there as we are approaching that. But again, seasonally, we should break that. We had a positive divergence where we might get a little bit of a pullback, but ultimately, by the end of next month, we should be higher and maybe even testing that 76 supply zone or even higher. So I'm looking at some bullish opportunities. In the live session last week, we talked about Costco as a buy opportunity. I also mentioned PG, Procter & Gamble. The reason why is they showed up on my list here, 100% and 87%. It was actually, I think, 93 at the time, depending on the day. So what I'm looking for are high probability opportunities that happen every single year on average at the same time. By using the seasonality, it gives me a higher probability that the trades I take are going to work out. And that's all we're looking for is high probability. So looking at Costco, you can see from June 26th and exiting about July 21st, you're right, almost 90% of the time. We'll call that 87%. And the average return is 3.75%. Sorry, 3.33%. There it is. That's the average rate of return. The two losses, again, were 2017 and 2010. So 17 was kind of bad for that sector to begin with, as we saw. But overall, this is pretty bullish. So looking at Costco, you can see we already did bounce off this demand zone. I called it out on the 21st that it was going to be bullish, and sure enough, boy, did that thing go to the upside still. There are still opportunities potentially. We just got to find them. We might have to go down to a smaller time frame. On a 4-hour time frame, if we can get a pullback to 464, there is a demand zone there that I'd like to buy. Not sure if there's anything else. No, that was it. That's all I could find right now. But if you get intraday opportunities, even on 60 or 15-minute chart, you know that we're supposed to be going to the upside until the mid to late July. They'll give you buying opportunities. Just swing on the long side and look for the entry opportunities. The other one was Procter & Gamble. Again, I was looking for a bullish opportunity on this. You can see that we are now coming into a little bit of supply here, 144.99. Overall, very bullish from the 26th of June to the 26th of July, 100% winners. Even 2017 was a winner, even though it was just weak. It was a weak winner, but it was a winner nonetheless. The average return is almost 4.5%. So definitely want to be long on Procter & Gamble this time of year if we find the right opportunity. Well, just got to wait for it. We're hitting supply right now. We might pull back, which is perfect. You don't want to buy things when they're expensive anyway. You want to buy them when they go on sale, when they're cheap. So just wait for that pullback and buy on the pullback. That's all. 139.69 if we get it, or wait to see if you break out of zones. Maybe you get target the next zone. I didn't see what Procter & Gamble did today, or Costco for that matter. Let's take a look. Costco, a little bit of red today. That's what we need, that pullback till we can buy. I don't know if it went down to any kind of intraday zones. Doesn't look it. And then Procter & Gamble, same thing. A little pullback today from that supply. It's what we need. Just be patient and wait. Hopefully it pulls back to our areas of demand. That's all I'm waiting for. Waiting to buy on the pullbacks. It's perfect. Now, another one I found is Walmart for a possible buy. Notice that, very consistent to the upside. 100% winners over the last 15 years. You can see. And from the 26th of June to the 21st of July has never let you down. Not always the best winner, but still not bad. 2.75 basically to the upside for an annualized return of 47%. So looking for a pullback again. We're close to the demand zone here on the 60-minute time frame, 122.92. Let's see if we got there. Hopefully not yet today. Oh, we just hit it right now, so we're there now. Hopefully get this video out in time for you to be able to take an opportunity here. But again, on the 60-minute time frame, there we are, and it's looking good to go. Should be turning around. You see that indecision starting to pick up and where we should bounce from this area. So hopefully this gets out in time and you're able to see this. If not, there's going to be others. Don't worry. Okay? Don't chase. Another sector that's doing very well this time of year, and you can see it was healthcare last week. So if we take a look at healthcare, again, that's normally a kind of a bear market safe haven. And we take a look to see, historically, 90% of the time for the next month, it should be bullish. Well, almost a month. 27th of June till 23rd of July, been bullish. The only year it didn't was the 19th. 2019, sorry, not 19th, 2019. Okay, but every other year it's been very bullish. So We're going to look at things like Abbott Laboratories. Why? Because for the last 15 years, from the 26th of June to the 21st of July, and even today, the 27th that I'm recording this, 93% winners. That's pretty good odds. All we have to do is wait for the pullback to try to get our 4.5% average annual return, average return for the period. The annualized return is 90%. That's pretty good. So with Abbott, we do have another demand zone here, about 107.74. Hopefully we haven't pulled back too much to that yet. I can take a look real quick. And no, we have not. So there's still time left on that one. It's going sideways. May end up breaking to the upside. You might have to watch for a breakout opportunity rather than a pullback. But either way, Abbott is holding up while other markets are falling down. That's a sign this is very bullish and therefore likely to go to the upside. We changed trend. We had the positive divergence, the pullback and confirmation with the low above 60 or 40, and there we are, moving up. Oops, sorry, I went too fast. Mettler Toledo International, MTD, another one, 93% winners, only failed us in 2019. That has an average 4.5% rate of return for 93% winners over the last 15 years, 14 out of 15. Looking at the 4-hour chart, need a pullback. This has been in a bear market, but looking to reverse this. We're catching near the bottom of the move. Again, if we get the higher low on the indicator, that's a positive divergence. And if we get another higher low here where we're not below 40, then that's confirmation we're changing trend. So waiting for that pullback. At the very least, if you don't buy the stock, you could always sell puts below the zone and still take profits that way. You could do a bull put spread or some sort of iron condor or whatever it is you like, even ratio back spreads to take advantage of these moves to the upside. There's all other alternatives that we could explore sometime. So MDT on the 60-minute is pretty much the same area, 1102. Yeah, just fine-tuning the zone if you wanted to 1102.50, 1096. Also, Edwards Life Sciences, another big winner. 93% of the time, it's done about 3.5% gain for the next couple weeks here, about 3 weeks. Waiting until the 19th of July for the 27th of June, you can see very bullish. And, of course, we've got some demand zones just below that are forming right now on the 4-hour chart with some overhead targets of 105.70, 115.63. Looking to go long here at 93.76 to 92.39, or basically, what is that, 91.60 to 90.02. So just be patient. Wait for the pullbacks. The financial sector also looking pretty good. 90% of the time for the last 10 years, it's been pretty darn bullish with an average return of 3.75%. So we might start looking at some of those financials as well, even though the interest rates are going higher. You can see the XLF chart has room to go at least up to 34.62. So look for some buying opportunities if there's smaller time frame pullbacks to demand. On the XLF 15-minute, hopefully this didn't hit already, but I was looking to go along at 32.06 with a stop loss 31.91, target 1 32.66, target 2 34.09. Oops, go back there. And let me just check real quick. XLF. It's come close, but I don't think it hit. Yeah, and we'll see if it comes down again. Honestly, it should have just gone in and bounced, but we'll see what happens. Maybe it comes down again. I never buy if we're below 40 on the RSI, but we'll see what happens when we come back down again. And maybe still in play. Another financial is Discover. 93% winners over the last 15 years with an average gain of 4% for the period from the 26th of June to 22nd of July. Really doesn't get going until a little bit later here towards the end of June, but that's okay. We're looking at a nice rally there. You can see we've had a positive divergence. No confirmation of the trend change, but that's okay. We can still go pretty good to the upside without getting a new high. So looking at DFS, there is a demand here at 92 to 93.88 on a 60-minute time frame. Looking to buy that. We got kind of drop base rally right there. And target 1, 106.29. Target 2, 114.89. So take a look at DFS. Not near that yet. So we held up. We're okay. Again, that was on a 60-minute, I believe. So we're still good. This one's still pending. So just wait for the right opportunities and take advantage of it when it happens. Moving on to my last section. This is India. So Kim Cho, everyone. We'll take a look at India for the week of the 27th of June and see what's in store for us there as well. the week of 12/6, I had these charts saying, hey, we've hit this demand zone. We're probably going to break that and go to the next level of demand just under 15,000. Well, follow through. We did. We broke through. We're still on our way down to 15,000. We do not have divergence. We have lower lows on both the indicator and price. That's suggesting we might continue to push to the downside. So just be careful of that. Looking at the daily chart, what's happened is we've got a divergence and a little bit of a pullback. I don't know how much further we're going to pull back, but overall, we're still pretty bearish. So this is just a small correction before we go lower. I still think we're going to reach that weekly demand zone just under 15,000. This doesn't look like it's stopping. We're just, again, getting a little bit of a pause here, and that's all we're getting. Going to the 4-hour chart, you just kind of see it too. We've only retraced about, not even quite 38.2. So, yeah, we made higher low, higher high, but it's a very weak trend. We can't even get above 60. And we can't keep our lows above 40, so there's a possibility of us collapsing again. I just don't have a good zone to get in, but I'm just cautious. And I think the Nifty will go lower, taking a lot of stocks with it. And you take a look at the last week performance, yeah, that's the last week's performance. Reliance, which is the big heavyweight on the Nifty, was down. So not a big surprise. I mean, everything else has been up, trying to drag it up. But when the big heavyweight doesn't want to go up, obviously the Nifty doesn't go up. So if these end up turning around, the smaller companies that were dragging it up, they start pushing down, then the rest of the market will drop with it. So keep an eye out for that. And Reliance on the daily, again, is just dropping. It was an impulse up. We retraced really deep and unfortunately went below 40, which means we're probably going to keep going. Even if we bounce here, we're not likely to go to fill that gap. We're going to stall somewhere probably at this 2560 area. On the 4-hour chart, again, we might get a little retracement back, but I'm still seeing us impulsing down. So keep an eye out as we pull back 2526 or 2576. One of those two is likely to cause us to continue to push to the downside, and that will take the Nifty with it, like I said. Looking at the Bank Nifty, we're consolidating. I've been talking about that, the little consolidation going on there. I think this was the earlier chart from a couple weeks ago. Yeah, it was. And you can see we broke the consolidation to the downside. That's right. We had this, and we followed through to the downside right there. We broke through, tried to pull back, and we did at a measured move. But ultimately, I think we're going to keep going lower. It doesn't look like this is anything other than a warning sign. Pretty similar to what I had on the S&P, the NASDAQ, the U.S. markets, basically. You had a positive divergence, just warning of a pullback, but not necessarily the bottom of the market. So this could just be a small pullback before we continue lower. And again, not seeing much different here. We have positive divergence suggesting a bit of a pullback. Look for it to rally up to 35,000 before dropping again. If it can get that high. It may not even be able to get that high, but that's the next area of supply right in there. And you can see just under that, there's a gap fill, and really it's a basing before the gap at 34,346 to 34,551. So that may be your target that we get to before we start dropping again. Now, if the RSI is above 60 when we hit that, we might have a possibility of going a bit higher. But if not, that's a great short opportunity. So that's what I got for you this week on the Wendell Effect. If you got questions again, let me know. Please contact me at the Wendell Effect at tradersmindset.association.com. I gave you the email address at the beginning, and you can always make comments down below. Make sure you hit the like and subscribe buttons for me, please. And until next time, trade safe, trade well. Take care, everyone.